Hello everyone, welcome back to Just Invest Today. In today's video, we are talking about Alibaba. Once again, we have to talk about the subject because guess what? Charlie Munger's 13F just came out, and what do you know? He still owns Alibaba. And honestly, I'm still thinking about this. I'm still shocked. Why does Charlie Munger still own Alibaba? Remember, he said this is one of the worst investments that he's ever made. And because it's a damn retailer, and he forgot about that. The business, the whole fundamentals kind of overshadowed all of those facts about it's just a retailer, and he bought it. So he said it's still a mistake. We know as Buffett followers, Charlie Munger, Morris Bry, all of those famous value investors, once you make a mistake, you actually change it right away. You don't let it linger and you let it just keep it going. So if he knows it's a mistake and he hasn't sold his shares, what is really going on under the hood of Alibaba? So let's talk about this in this video. But before we do, like it and subscribe to my channel, please. Thank you. Like and subscribe. So Charlie Munger first bought Alibaba in Q1 2021 when it was around $190, $180. He bought around 165,000 shares of Alibaba right away. So that's how you know Charlie Munger was super bullish on Alibaba. He kept buying into Alibaba during that whole time that it was crashing during the whole crackdown, the whole Chinese Communist government talking about, Ant Group and not allowing it to kind of IPO and saying it's not doing what it's supposed to do. And that's when the whole tech crackdown was happening. Chinese government went after education stocks. It took over that whole market, went to zero basically, or went under really, really fast. Now it's kind of recovering. A whole saga hampered the whole Chinese market. And that's when everyone was scared, saying China is uninvestable at that point. But Munger was still buying that whole time. He had an opposite thesis of everyone else. He still owns 15% of Alibaba in his daily journal corp. So that just shows you that he hasn't sold anything. And that's just, again, shocking because we know Charlie Munger, and when he knows he made a huge mistake, he's selling out of it. He's not waiting around and hoping for the stock to come back up with no fundamentals or no moat. He's not going to do that. He's just going to take it as a loss, take it on the chin, and kind of move right on because he knows about opportunity costs and his money can be spent doing other things. So we know Charlie Munger still likes Alibaba. And that's with Warren Buffett saying he sold all his TSM because of the whole China market and all the regulations. And he just not confident in what's going to happen in China because the whole Taiwan situation might unfold badly and he doesn't want to be holding the bag if that whole situation plays out. So he sold out of TSM for that reason. We have Morris Bry basically saying the same thing. He sold off all his Baba. It just seems like he's so down on the Chinese market. I would be surprised if he still owns Tencent/Prosus at this point, but who knows? Morris Bry doesn't really talk about his holdings or his Chinese holdings too much. I don't really know what's going on with his Tencent position, but guys, we wouldn't be surprised if he sold out of Prosus right now. So that leads me to just think of Charlie Munger at this moment. At this point, Charlie Munger has to be seeing what everyone else is seeing. All the value investors, if you know, or if you're confident in the Chinese stock market, then we're just not worried about all the news and all the headlines because we know that's going to come to us and we just kind of like bouncing that shit off. We're just kicking it to the curve. We saw Michael Burry understand that JD.com and Baba are super undervalued at this point. And look what's happening. The news is on our side at this point. We have the whole kind of regulatory crackdown on China kind of dissolving. The Chinese government finally gave Alibaba/Ant Group its fine, $1 billion, man. So that's it, man. We can kind of get over this whole situation. And the government is basically saying, now that all the crackdowns are done, we want to normalize. So the Chinese government coming out and his officials coming out and saying that is huge news, huge. So now we can kind of see a regulatory environment kind of stable because we're seeing them actually issuing out gaming licenses for Tencent, for NetEase. That wasn't happening before this whole crackdown was happening. That was not going on. Now we can kind of see a potential IPO, and we already know what Alibaba is doing with the 6 different companies, and it's IPOing everything like for Shippo, like the cloud segment. So we see that direction going in that way. So if they can kind of IPO without any kind of government overhang, it's just going to shoot up Alibaba. The last month, Baba is already up 10%, which is just the beginning because we have more government news coming out from China, from Alibaba. The government is looking to back up companies like Tencent, like Alibaba, like PDD. Alibaba, Tencent, and Meituan praised by Beijing for helping China tech progress and new sign of attitude change. Chinese premier met representatives from Alibaba Cloud, Meituan, and Duan. The meeting came after the National Development and Reform Commission praised several big tech firms, man. And this is what's happening in China right now. Alibaba Group, Tencent Holdings, Meituan are among a handful of tech companies praised by China's powerful economic planning agency for their roles in supporting the nation's technological progress and economic growth, a fresh signal that Beijing is putting on a friendly face towards big tech. The meeting, which focused on ways to boost the healthy and sustainable development of the platform economy, was attended by Alibaba Cloud, Meituan, and ByteDance. This just goes to show you what's happening in China right now. We know that they do not want to kill their golden goose, and Moshe Bride used to talk about this. Why would they kill the biggest companies? All that technological investment, like why would they kill it right now? They're going to be the biggest economy. They need the biggest companies to keep doing what they're doing. What would America be without Apple, Facebook, Google? Like, would it really be the top country for people going to tech there and this big economy if it wasn't for those companies? That's equivalent to killing all the Alibabas, the Tencents, the PDDs, the JD.coms, man. So we know that's not gonna happen. They want those companies to succeed, get bigger, get more jobs, provide more for the community, or provide for the economy. So that's why I'm just so bullish, and I've been ignoring all the bad news for 2+ years because I understand this. I understand that the government is not trying to kill the companies. They just want regulation on all companies to be at an even level. But guys, what do you think about this position right now? Alibaba, it's kind of going on this nice run. Is it going to sustain? Is it going to go down? What do you think of Charlie Munger not selling or not buying any more Alibaba shares in his new 13F filing, guys? Like this video and subscribe. Peace.